Okay.
So we are recording, and I'm going to go ahead and take us live on Facebook. So while we're getting things going.
Okay. I may want to start talking. It's so funny when you see it on Facebook sometimes beforehand, and we're just all here waiting.
Right.
It is good to see everyone. I see more people logging in now, so that's great. Hello, Laura, and then Amy. Hi, and Kelly. Is your partner on tonight? I don't see her yet. Kim and Kayla. Kendra's here. I think there's more that I can't see. Okay, well, it's 5:30 now, so we'll go ahead and get started. Welcome, everybody. For those that don't, I'm Tracy Irby, the director of TWU, Center for Women Entrepreneurs. We're so glad everyone's here tonight. We also have Donalisa Stinyard. She's our program coordinator. And if you have questions while this is going on, she'll be the one that you direct your questions to. Looks like most all of you have been before, but just very quickly, the Center for Women Entrepreneurs was funded in 2015 by the state legislature just to help promote women in business anywhere in the state of Texas. We are a part of the Jane Nelson Institute for Women's Leadership. We're dedicated to preparing women to take on successful roles in business and public service to ensure women have the education to establish careers as successful C-suite executives, the skills for building entrepreneurial businesses, and the framework needed to run for public office. So glad y'all are a part of this. Each week we are introducing our grant winners. That's what this series is for, but we have found so many people like to attend it that weren't grant winners. So we keep it open and let everybody attend. I'm going to go down the list. And I know, Marquita, you have your other partner on. So after you, if you want to introduce her to jump on, that'd be great. Laura, you're the first one on my list. So if you, again, tell your name and your business, then our speaker too will know what kind of businesses everybody has.
Awesome. Very happy to be here again and happy for the opportunity. My name is Laura Hayes. I am the founder and CEO of the Learning Bridge. We provide training and professional development for schools and nonprofit organizations to increase student achievement and educational outcomes and youth engagement.
Great, thank you. Kelly, I have you next.
Hi, I'm Kelly, and my partner Deborah White Doty is here, and we came together. We went to school together years ago, she and her husband and I at Art Center College, and then we met each other about last summer, and we started kind of brainstorming. So we've been working all through this pandemic, and we have produced a company LLC that's called Springamajig Press, and it is a greeting card and fine art press where we will be selling our fine art prints and photography prints, artography prints. And Deborah is really the designer and the photographer, and I'm the illustrator artist. And so we are combining our efforts into a product line.
That's great.
Ready to launch pretty soon.
And we've seen your pictures. You do beautiful artwork, and we loved everything we saw that you guys have. So did you want to just wave or say hello, Deborah? Okay, she's going to wave.
Hello. Nice to be here.
Glad you're here. For those who have partners, if you can't make it, it's okay if somebody from the business sits in for you. And then we always send out the video afterwards. Marquita, I have you next on the list.
Hello, everyone. My name is Marquita Samuel, and my co-founder, Lisa Alexander, is here. Just like Kelly and Deborah, we both were in marketing together, and we realized there was a need for women entrepreneurs to have stylish and beautiful, but easy to use business templates for them to be able to execute their daily operations with something stylish. And so we created digital business assets. The website is Your Digital Business Assets. So I always mix that up. DBA for short. And we're just happy to be here. We're so thankful to TWU and of course for the learning. And we hope to help as many women entrepreneurs as possible create stylish and beautiful business templates for them to succeed with whatever they're working on.
Great, thank you. And Lisa, did you want to say hello? Or where'd you go?
I know, it looks like we lost her all.
I know, it looked like she was doing something and then she was gone.
All right, thank you so much, Tracy, for acknowledging her though.
Oh, you bet. Well, we always want to do that. We'll go on then. Kendra, we have you next.
Hello, everyone. My name is Kendra Outlaw, and I am the owner of Atmospheric Home Staging. We are based in Dallas, Texas, and we specialize in vacant home staging. So we help homeowners, real estate agents, builders, and investors get their homes ready for the real estate market.
Great, thank you. Is Jamita here? There she is.
Yes, good evening. My name is Jamita. I'm the founder and CEO of the Software Vaults, with a boutique technology firm here in Dallas, Fort Worth. And we help startup companies turn their vision into reality, think innovatively, and improve their concept so they can gain the funding that they need to succeed for their MVP or their products. So thank you for acknowledging. I'm happy to be here.
Oh, glad you're here. I'm not sure who has the phone. Jamila, are you here? Okay. Amy, you are next.
Hello, everyone. I'm Amy Melton, and I have the Mug Coffee Stand. It's a mobile coffee trailer that we actually have a permanent spot for that can be a walk-up or drive-through coffee stand. And we are starting our second one, which is going to be called the Travel Mug, and that'll travel around to different venues and businesses and fairs and things like that. So we're able to keep our one in its spot and then move another one around.
That's so great. You know, Donna and Lisa and I always say we love coffee.
I
know. Felicia?
Yes, good afternoon, everyone. I am the chief creator and founder of the Brownstone Experience, which is a wellness, fashion, and beauty experience inside of the Black woman community. So I'm setting out to launch a nationwide brand of a department store sourced by majority minority owners or designers and product owners. Currently, less than 1% of designers in major department stores are women of color or designers of color, right? A designer can be, gender doesn't matter. So that is the Brownstone Experience, and we're just getting started and happy to be selected in here tonight.
Glad to have you. Erica, you're next.
Hello, ladies. Erica Moulette here. I am the CEO of Kandake Tech. Pardon the no camera. I am having a crazy hair day. I'm 2 days away from going to the hair salon, so no in-persons for me unless you're in the family. But Kandake Tech really focuses on education tech platforms, both apps as well as websites, aimed at creating a connection between the passions that our children have, the education that they can find within them, as well as this connection to the real world. So we're currently working on a platform called Banachie.com, and this grant is going to help us to accelerate our development of that site. So I'm really excited about that. Thank you guys so much for having me.
Glad you're here tonight. And just so all of you know, we have sent out a press release, but we also have your names listed on our website and information on there right now. Erica shared it and tagged us in it. So if you haven't seen it, your information is out there. If you want to share it and put it on your timeline or let others know that you are grant winners, we're again so excited for all of you. So we'll go ahead and get started on our program tonight. Well, I do see that Jamila has jumped in. And Lisa, I see that you're back. I was called your name and then you were gone. I don't know if she wants to say hello or did we lose her again?
I'm here. Just not going on camera today. Hey, everybody. Glad to be here.
Yeah, we're happy you can attend as well. Thank you. All right, Jamila, if you want to introduce yourself.
Oh, hi, everyone. I'm a little flabbergasted today. So I'm going to try a thing. Can I try a thing? I want to try like my new pitch that I just wrote down. So let's go for it. So my name is Jamila James, and I run a company called Intega. And we transform numbers into stories that inspire creativity, innovation, and action that ultimately help businesses grow and thrive. What do y'all think?
Good job. Very good.
Thank you. Work in progress.
Yay, so good. Okay, well, we'll go ahead then now. Great job with that and get started. Tonight we have Christopher Henry. Chris from Minor and Jester. He's been a partner with the firm since 2018. He was voted best lawyer in Denton County in 2016. He graduated, he got his law degree from the other TWU, Texas Wesleyan. And when I'm in Fort Worth, they call us that. University Law School in 2008. And we're very happy to have him here this evening, and he's going to talk about legal entities for your business. So welcome.
Well, thank you very much. I hope everybody can hear me. Like Tracy said, yeah, I was born and raised in Denton, work at a law firm, the oldest continuous running law firm in Denton, Minor and Jester. And a significant portion of my practice is devoted to business entities, whether that be creation of the business entity, merging them, selling them, acquiring them, or protecting them in lawsuits or filing lawsuits on their behalf to protect their interests from someone else. So what I was asked to speak about here tonight was business entities. Do you need one? And if you do, what kind of entity do you need? I'm going to start first with just an entity in general, what it is, what it will do for you, and then we'll get into the details of which entities you have the options of selecting and what might be best for you. Now, I don't believe you will leave here today thinking, I know exactly which entity I need. I would suggest you do significantly greater research, probably talk on a one-on-one basis with either an attorney or a CPA about your specific business, your specific interests, and your ideas for the future. And only once you really get a hold on that would somebody be able to really decide or advise you on what would be the best entity for you. But in general, the difference between you as what we'll refer to as a sole proprietorship, or your individual self as a doing business as, or a DBA, the difference between that and creating and doing your business as an entity is like, I would say, really mainly twofold. One, liability protection. If you're going to be doing business out in the world, one of the costs of doing business is the risk associated with somebody either not liking what you do, getting hurt by something that you do, or thinking that something that you do is going to hurt them or somebody else, whether it has or not. But that's liability. For a number of the businesses that you guys have kind of explained and I've heard you have going on, a lot of your businesses seem to be service related rather than product related. So the liability protections from a service related company are going to be much more focused around contractual obligations. Like if you're going to be making a service or doing a service for someone, you have to make sure that whatever contractual documents that you share with them or that you enter into with them, that you hold up your end of the bargain or that they hold up their end of the bargain as to what exactly it is they're going to give you. Normally that's going to be money and you are actually going to create your service. So from a liability protection standpoint, if somebody doesn't like your service, they may possibly sue you and say, hey, you didn't give me, I paid you, $5,000 to do XYZ. You didn't give that to me. I'm going to file a lawsuit against you. Well, if you are doing business as a sole proprietor, then that is you. You individually, yourself, are being sued. And any judgment or any ramifications of that lawsuit is going to come and rest squarely on you, your individual shoulders. And if any money judgment is issued against you, you're going to have to pay that out of your personal funds, your funds that buy the groceries, your funds that pay the mortgage, your funds that pay your car note, all of that. And anything, let's say there's a significantly larger judgment. Let's say not a $5,000 judgment. Let's say for one reason or another, it's a $100,000 judgment. I'm not thinking most of us have $100,000 just sitting around that you could write a check for. So what's that going to do? That's going to put your assets that you personally own up for collection for this person who got a judgment against you. Now, I know we're taking this to an extreme here and saying, well, what if? But that's my job as an attorney, is to think about the worst possible what ifs out there. So really the liability protection, if you have an entity and you're doing business as an entity, the entity is the one that gets sued. An entity like a corporation or an LLC or a partnership, if properly created, creates a totally separately acknowledged legal person. Let's say you are over here as your individual self, and then the entity is over here as a totally different individual self. So if anybody that's doing business with the entity is not technically doing business with you, they're doing business with the entity. And all money that comes in and out and all of the obligations and everything are the obligations of the entity. Yes, ultimately, if you're the sole owner of the entity, yes, it's ultimately going to be you. But from a legal standpoint, there is a very significant difference between doing business as an entity and doing business as an individual. So let's just put that on the side. There's liability protections when you create an entity and do business as an entity. Additionally, which I'm not going to touch on too terribly much because I am not an accountant, there are also tax advantages and other tax consequences of doing business as an entity. There are fancy things that well-versed and well-educated CPAs can do with entities, which save you a significant amount of money on your taxes that an individual person doing business as a sole proprietorship may or may not be able to do. So now, I'm obviously not going to go into too terribly much more detail about that because, again, I'm not an accountant, nor am I a tax attorney. I am a business formations and litigation attorney. So what my main focus is on the liability protection of creating these entities. So the question anybody who comes into my office asks me is, do I need an entity? Well, I ask them, what are your goals? And if your goal is just, I'm going to sell, I make widgets in my kitchen, and I'm going to sell 3 or 4 of those a month for $100, I'm going to tell you, the cost, expense, and maintenance obligations of an entity may not be in your best interest if it's just going to be you and you're selling $100 widgets out of your kitchen. Because there's not a whole lot of liability there. There's not a whole lot of taxing consequences, and you're not dealing with anybody else. But as you start to increase your possible exposure, as you increase the revenue generated by the entity, by the business, and especially if you're going to be doing business with someone else, be they a college friend, a high school sweetheart, your wife, your best buddy, it doesn't matter. Once there's two people involved, spouses may be a little different, but if you're doing business with anyone that's not your spouse, I would highly, highly recommend you seeking some sort of counsel on a creation of an entity, because as we all know, the best laid plans go awry. So do you need an entity? I would say if you're doing business in any sort of fashion, generating any sort of significant income that you would like to protect yourself from any liability or take advantage of tax consequences and tax issues related to your business, I would suggest you do actually create some sort of entity, be it an entity that you register with the Secretary of State or just something on paper to spell out the rules between you and someone you're doing business with. I'd advise you to get something put together. Now, once you've decided maybe an entity is the way to go, what are your options? In its absolute simplest form, you step away from a sole proprietorship, and then maybe I think the simplest one is going to be your partnership, a general partnership. Normally it involves two, maybe more people who agree to share in the obligations and the profits and the losses of a certain business venture. Really the primary advantage of that partnership is that you share. You're not 100% liable for all of the obligations, all of the debts, all of the everything with the partnership. However, you also split the profits. Now, as to is this partnership a 50-50 partnership, 75-25 partnership, things like that, that's when you get into needing something written down. How are you going to split everything? But the law of the state of Texas does recognize general partnerships evidenced solely by the actions of two people. So if you got two people doing business together, you don't need to have anything written down as long as there's enough evidence of what you're doing that you are going together in as a partnership. And most of the time, that's going to be seen as a 50-50 partnership. Both of you are going to be equally responsible for the debts and liabilities and all the consequences that come with doing this business. So that's the absolute easiest entity formation, and it doesn't require anything filed with the Secretary of State, anything written up, just doing business with somebody else. Congratulations, you've likely created a partnership if something goes sideways. The step up from there would be a limited partnership or a limited liability partnership. That is something where now you start to create advantages of liability protection in an entity. Exactly what is called a limited liability partnership or a limited partnership. Those are two different types of entities, but for our talk tonight, I'm not going to go into the difference, but you generally have a general partner, which is responsible for everything in the business. And then you've got limited partners, which only share in losses and profits, but they have no management responsibility. Therefore, they also have no management liability. So they can't be sued. If you are a limited partner, you are only subject, liability on you is only subject to what you've invested in the entity. And if the entity gets sued out of existence, you've only lost what you've invested, even if significantly greater obligations exist. So that's where you kind of start your liability protection. Stepping up from a partnership or a limited liability partnership, you can go all the way to the other end, and let's say it's a corporation. Everybody normally, when you say business entity, everybody normally steps immediately to, oh, well, that's a corporation, an Inc. Okay, well, because for a long time, partnerships and corporations were the only two real business entities that were really acknowledged out there in the world. And a corporation is is probably the most scrutinized and the most restrictive type of entity, but because of its restrictions and rules and all of that, it's usually the best form of an entity for a larger company. Again, the corporation becomes a totally separate entity from the people who funded it and founded it and who handle all the responsibilities. But like an individual person, the corporation can be taxed itself and can be held legally liable for the actions of the corporation. The corporation itself can make a profit. That's how the corporation gets taxed. If you go into the taxation issue, everybody knows that or most people know that there's the difference between a C Corp and an S Corp. Now, I'm not going to go into taxation and all those rules, but generally the idea C Corp is taxed itself as a separate entity, and then any money that comes out to the shareholders ultimately would be taxed again. So that's double taxation. But you can make an IRS election for an S Corp, which avoids the double taxation and has all of the income that flows through to the shareholders. But a corporation, depending on what you want to do with it, one of the restrictions is you can only have 75 or 100, I'm not sure. You can only have either 75 or 100 shareholders of a corporation, so of a close corporation. So if your goal is to bring in a bunch of investors and you're going to have little micro investors all over the place and you want to give a bunch of folks a piece of the action, maybe a corporation for one thing here is not going to be your best option. So you've got your partnerships on this side, your corporations on this side. What I consider the sweet spot for most small businesses is what is sometimes considered a hybrid form of a partnership, is the limited liability company. And in most states, including Texas, it's a relatively new form of entity, been around for the past like 30 years or so. And what's great about it is you can take advantage of the benefits both of the corporation and of the partnership business forms, in that the IRS does not acknowledge an LLC specifically as its own type of taxation entity. So if you are an LLC, you can choose to file as a partnership or a corporation. So it gives your accountant a little bit of wiggle room as to how you want to get filed, depending on what you're doing, what's going to be most advantageous to you. And also in a limited liability company, you can make it either member managed, where anyone who is a member, who is a shareholder, has management authority, or you can create an additional level of management and create a manager managed LLC, where just because you're a member and you're a shareholder of the company does not specifically mean you have management authority. So you can do a lot of the same stuff that you can do with a corporation, like have a bunch of investors who invest money, but you as the manager are the only ones who has management authority. So it's kind of a hybrid, and it's all the vogue these days. Most everyone creates an LLC. And unless you've got an eye that you're going to be funded by millions of dollars because you've got the next big thing and you're going to go out and get patents and all this kind of stuff, an LLC is most likely the suggested business form for a small business if you don't want to go the way of a partnership. So now you've got all these different options. How do you choose? Well, there's really what I've kind of categorized as 5 different considerations you need to look at choosing a business entity. What kind of liability protection are you looking for? Most entities have a 100% liability protection to its owners, save maybe the sole proprietorship, which really isn't a business entity, and maybe the general partnership. All of the other forms of an entity will create that liability protection for the shareholders. Secondly is your tax implications and your tax consequences, which I'm not going to go into too much, but you need to absolutely have an accountant that you trust when you're creating a business. you need a business attorney and an accountant. Those are two things that I believe are absolutely a must if you feel like you're really going to step into the world of running your own business. The third consideration in creating your entity is, what does it cost? What is the upfront cost of forming the entity? And then on an ongoing basis, what are the maintenance requirements? Both with your attorney, do you have to have annual meetings of your shareholders, your directors? Do you have to paper those meetings? Are you going to pay an attorney to do that? Are you going to do that yourself? Do you feel comfortable doing that yourself? Also, what obligations on an annual basis are there with the Secretary of State? All of these entities that you have to file something with the Secretary of State to register, you're going to have to file an annual public information report and franchise tax report. Now, depending on how much you make, you may or may not have to pay any franchise tax. And most small businesses don't in the state of Texas, but you're either yourself or you're gonna have to pay your accountant to file those reports. So keeping up with the more complicated and possibly more advantageous forms of business will in and of themselves create an obligation of an expense on an annual or semi-annual basis to keep up with your entity. The fourth concern is flexibility. My guess is with a small business, your goal is to maximize the flexibility of the structure by considering, when considering the unique needs of your business and the personal needs of the owner or all of the owners or partners. Your individual needs and your entity's needs are really crucial to the selection of the type of entity you want. And then really number 5 is, what are your goals in the future? If today a sole proprietorship is going to work for you because you're not really doing a whole heck of a lot, so you don't need that, you don't have a partner. But if your goal in the future is to bring in a partner or to bring in investors, when you're first starting a business, it's not uncommon to get caught up in all the fun stuff, and you get consumed with getting your business off the ground, and you don't pay a whole lot of attention to what is this going to look like in the future. So possible future considerations of selecting your business entity can really save you in the long run of selecting the improper form that you'll have to convert to, or create an entity later, which is not the most horrible thing, but from a taxing standpoint and contract standpoint, going from a sole proprietorship or a partnership to another form of entity could create some additional costs and possibly some confusion. So that's kind of the 5: liability protection, tax consequences, the cost and maintenance of the entity you select, flexibility in both management and possibly investors or capital, and then your future outlook. So looking at all of that, you have to weigh what's going to be best for you. And with all of those in mind, I think I'll just I've got here in my notes that I'm looking at, just touch on which one of these entities is best with each kind of thing in mind. And again, this is going to be super 30,000 foot view, because again, each one of your businesses, especially looking at all of these different items, are going to be very different. Some of you, you're a one-woman show. You make all the phone calls, you go out there, you meet with the customers, clients, there's nobody else involved. You run it out of your house, or you've got a business space, all that. You don't need anything other than a sole proprietorship, because it's just going to complicate stuff and create a lot more expense. Okay, if that's the way you want to run it and you're going to do that for the rest of forever, great, sole proprietorships for you. But somebody who looks like the exact same style right now, yeah, they're a one-woman show. They got everything going on. They're running the show themselves, but they've got an idea within 2 years. They want to have a staff of 3. They want to have a salesperson out there. And they may bring in another investor who's going to fund, who's going to dump $50,000 into this business because they think it's a great idea, but they like you. They want you to run it. They just want to invest. I've probably had 3 of those situations in my office within the last probably 1.5 years, 18 months. I've had like 3 people will come into my office and they say, this person knows what they're doing. They've been in this business. The 2 of us see where this person's going and we just want to invest. And the person who's running it says, I don't want their fingers in my business. So I like their money and I'd really like to keep it that way. So creating a structure, most likely an LLC, which I suggested to all of them, wherein you've got a management structure, which is just one person, and then you've got membership interests, which would be kind of like a shareholder, where if profits are made, then it goes out to those shareholders. You can structure all of this any way you want, but you need to have an eye of what are your goals in the future and don't shortchange yourself. But again, weighing what's the cost of dealing with all of this right now and is it really necessary? So starting with the sole proprietorship, it's obviously the simplest structure. Usually involves just one individual who operates the enterprise. If you intend to work alone, as I said, this may be the way to go. The tax aspects of a sole proprietorship are appealing because income and expenses are really easy to take care of. They're included in your personal income tax return, your 1040. Profits and losses all go on a Schedule C, and you're good to go. Go on down the road. But you'll have to pay self-employment taxes. And you'll also have to make quarterly estimated tax payments on your income. So there's a lot of different issues dealing with a sole proprietorship. A few disadvantages to consider are by selecting a sole proprietorship, it means you individually yourself are liable for the company's liabilities. You get no liability protection. As a result, you're placing your own assets at risk. And they, like I said at the very beginning, they could be seized or they're up for grabs to satisfy any business debt or legal claim that somebody brings against you. And lastly, going into the how are you going to fund this thing, raising money for a sole proprietorship can be difficult because pretty much your only option is going to be loans from a bank or other finance companies. There's plenty of them out there that would be happy to take your money at some sort of ridiculous rate and charge you, some sort of ungodly amount of interest because you don't have any other options because you've created a sole proprietorship and you're dependent on loans. So that's kind of where you're at on a sole proprietorship, but a partnership. If you're going into business with somebody else, as I said, this is the simplest form of an entity. Most people are not going to go with a general partnership because that kind of defeats the purpose of creating a partnership in an entity. Most folks, if they're going to do a partnership, are going to create a limited partnership where you've got general partners and limited partners. As I said, the general partner owns and operates the business and assumes all the liabilities for the partnership, while the limited partners, who would be maybe the investors or something like that, they have no control over the company, and they're not subject to all of the same liabilities as the general partner, but they have no control. And I have here that unless you expect to have many passive investors, maybe a limited partnership's generally not the best choice for your new business structure because the filings and the administrative complexity and all that kind of stuff may not be necessary. If you have two or more partners that want to be actively involved, either a general partnership might be easier to deal with if everybody's okay with all being on the hook, or creating one of these other entities that's just a lot easier to deal with than a partnership. Tax treatment for partnerships. is that the IRS does acknowledge a partnership as a business entity. So you start to get some of those tax advantages, which I'm not going to speak too much. But if anybody knows much about tax filings, if you're in a partnership, you will get a K-1, which is your interest in the partnership and its flow through taxation. The partnership itself doesn't get taxed. Only the partners of a partnership get taxed. So there's a little bit of an advantage there. I have a note here that if you are going to create a partnership, protect yourself and the other party to your partnership with a partnership agreement. Put it down in writing. Either if nothing else, find something online, which I don't really suggest, but it's better than nothing. Find something online, write down the obligations of everybody, get everybody on the same page as to what's expected of each partner, what are responsibilities, what happens if somebody becomes disabled, what happens if they die, what happens to their interest, if they get divorced, what if they want out, what if they want to sell their interest to somebody else? Well, can they do that? All of this needs to be written down in a partnership agreement. As I've always said, once you move from doing business by yourself to having a partner, everything gets a lot more complicated, and you really need to take a step back and create some documents to get everybody on the same page. So that's kind of a partnership. Then again, going to the other extreme, you've got the corporation. It's the most complex and probably more expensive than any of the other business structures. It's, like I said, it's a separate entity from its owners. It's required to comply with a lot more regulations and tax requirements. You absolutely have to file this with the Secretary of State. You create an entity. I think the original filing fees for these are like $300, and then you have to file your annual accountings and all that kind of stuff. But again, you have probably the most robust, this and the LLC have the most robust liability protection of the shareholders and the owners of the corporation as any structure out there. One of the biggest benefits to an owner who decides to incorporate, again, is the liability protection. The corporation's debt, if you borrow any money in the name of the corporation, so long as you don't personally guarantee the debt, is not your debt. And if for some reason you can't make the payments, they're not coming after you personally for any of this. Likewise, if you enter into an agreements with any vendors or anything in the name of your entity, then that's the entity's obligation. If you can't make payments, they cannot come after you individually. That's the layer of liability protection of most all of these entities, and very specifically a corporation or an LLC. You're not putting your own assets out at risk. Just as if you get sued for one reason or another, your personal assets are not out there at risk. A corporation, depending on which way you file it from a taxing standpoint, it can retain some of its profits without you, the individual owner, paying taxes on them. So if you want to use money to reinvest, in certain situations, you don't have to pay tax on that. Another plus is the ability of the corporation to raise money. If you ever need more money, you can go out and sell shares. I mean, this is kind of getting a little bit big, but if you want somebody to invest, you can say, hey, I've got a company, I'll sell you, 20% shares in my company if you invest XYZ dollars. And at the end of the day, if the company makes money, you pay out to your shareholders. They make money. So you don't have to rely on banks or loans. It's shareholder investments, and it's very different. But again, the corporate structure comes with a number of downsides, one of them being the higher cost, the maintenance. You'll probably need the assistance of an attorney to guide you through all the filing requirements, and absolutely you will need the assistance of a CPA to file your taxes, because the corporation itself will have to file its own tax returns. So there's a lot more steps in a corporation, but it has greater liability protections and possibly flexibility on how you fund things and what you want to do. So going from partnerships to the corporations on either side, then you've got this sweet spot, which I keep referring to. It's the LLC. And it's sort of a hybrid entity. And I lost my place. LLC, bringing together some of the best features of the partnerships and corporations, because you have the flexibility of management. Also, earnings pass through to the owners if you want them to. If you file as a partnership, you don't have to pay tax on the earnings for the entity and then tax on your own earnings when it comes out. It's similar to corporation in the aspect, except an LLC offers small business owners no limitation on the number of shareholders. So you can have as many members coming in as you want. And also, depending on the way you create your entity, all of those members, everybody who invests money, can have a management say. If it's a member managed LLC, everybody who invests has a say to the extent of their investment in what happens in the entity. Or you can have a manager managed LLC where just because you've invested money and you're a member doesn't mean you have management authority. Only the managers of the LLC, which is usually a very small number of people or just one person, has management authority. So there's all kinds of flexibility, and that can be changed back and forth if and when you want to do that. Also, when you create an LLC, you create a document called your company agreement, which is kind of like the partnership agreement, which says what's going to happen to somebody's LLC interest if somebody dies, what's going to happen if they get divorced, what's going to happen if somebody wants out, if they want to sell their shares. You have a lot more control over that than you normally would in a corporation. In a corporation, it's generally the idea that if you've got shares of a corporation, you can sell those to somebody else unless there's a specific agreement to the contrary. In an LLC, you've got a lot more control over that. That's why it's such a hybrid, and it's great for a small to medium-sized business because you've got so much control, and there's very few restrictions in the Texas Business Organizations Code as to what you can and can't put in your LLC operating agreement or company agreement. And some of my clients have gotten very creative with the kind of stuff they want to put in their company agreement, because most people will have had a number of conversations with one another as to what they want their entity to do before they come talk to me. And so it's my job to figure out, how do I make that happen? One of the downsides to LLCs is that well, there's not a whole lot other than the paperwork. The paperwork is similar from a filing standpoint to that of your corporations. You have to file it with the Secretary of State. You have to pay franchise taxes. You have to do your annual reportings and all that kind of stuff. So you will likely need the assistance of an attorney or a CPA to create these and to manage your entity. So I want to leave you, I'm getting close to the end of my time here. I want to leave you with a couple of resources. One of them, and I'm going to share my screen here if I can figure out how to do that. There we go. I'm going to share my screen here. This is the Texas Secretary of State's website. You can look up here.
We can't see it.
Oh, you can't see it? Hang on. Can you see it now?
Looks like it's starting. Yeah, there it is.
There we go. Okay. This is the Texas Secretary of State's website. It's sos.tex.gov. And you've got business services. Actually, let me just go and show you how I got here. This is a great resource because if you are going to file an entity, this is where you have to do it. This is the Secretary of State's front page. Go to business services. You've got your business basics, business startup information, and that's where I had clicked. And then selecting a business structure. You know, if everything I said here kind of just glossed over you, this gives you kind of a general idea. and spells out a little bit of the different types of structures and what they're for. And this will give you your filing options, the fee schedules, what it costs to file with the Secretary of State, and all that kind of stuff. So this is one of the resources that I will point you to. And secondly, the Small Business Administration. It's got business guides, launch your business, picking a business location, choosing a business structure, your business name, registering your business, and all this other kind of stuff. Just for what we're talking about here, I got to choosing a business structure, and it gives you your sole proprietorship, your partnership. It gives you a little information on LLCs. And see, this is a very crude depiction of the difference between your personal assets and your business assets. They're very separate once you've created an entity. C Corps, S Corps, closed corporations, nonprofit corporations. I didn't go into any nonprofit corporations, which I could talk for multiple hours at a time as to the specific difference in a nonprofit corporation. But if you are trying to create a nonprofit corporation, I would highly, I don't advise anyone. Sometimes I tell people, if you've done your research, maybe you can create an entity on your own. But if you're going to create a nonprofit and have it approved by the IRS, do not do this on your own. Seek either an attorney, or some CPAs will create them for you. I would hire a professional to do that. Cooperatives, I didn't go over. But you can compare the business structures and all that kind of stuff. These are just two things that I popped on right before we got on here. Two places that you can go and get some general ideas, and specifically the Secretary of State's website. That's going to be where you're going to file your formation documents. It's also going to be where you're going to have to file your annual reports, your public information reports, and also anybody who wants to look up your business to see who you are, when you were formed, are you doing the things that you need to do, is going to go to the Secretary of State's website and verify that your entity is a real entity and you've done your homework and you've done everything you need to do. So with all of that being poured over you as quickly as I could spew it out, I guess I'm getting close to the end of my time, and I'll open it for any questions anybody has about any of this.
So Chris, the way we do it is they've sent their questions to me in the private chat.
Okay.
So if we do get to a point where maybe we need them to explain it some more, we'll have them pop on, no problem.
Okay.
So starting out like way back when we first started, Laura wanted to know, do you get the liability protection if you are a single member LLC?
Yes, you do. And that is great about the Texas Business Organizations Code. There are certain states that require when you file an LLC to have multiple members, but Texas does not require multiple members of an LLC. So you filing as a single member LLC, as long as you maintain an LLC bank account, you do business in the name of the LLC, and you keep your personal name off of everything, just because you're a sole member of an LLC doesn't restrict you from taking advantage of all the liability protections, the tax ramifications, everything that goes with creating an entity of multiple people is the same for a single member LLC or a single shareholder corporation. The only entity that I know of that you have to have more than one person in management is a nonprofit corporation, because you have to have at least 3 directors in a nonprofit. But other than that, all your corporations, and it would be hard to create a partnership with one person, because that's not really a thing. But creating an LLC or a corporation with only one shareholder or one member absolutely gives you all the advantages that I talked about for those entities.
Okay, and then we had Kim wanted to know, how do you functionally work or say to persons with unions in reference to business unions and or something similar in kind? And Kim, you may need to pop on for that one.
Okay, I think did you want to answer something first, Chris? Defer.
I I don't really
Just in
understand
general?
the question. I think I'd need a little more clarification.
Okay, and I think I know the answer in general. I guess I'm just wanting to hear from a law perspective on a different side in regards to what unions actually do when you have to actually utilize them or need to utilize their services in regard to the type of business that you do. And so I just said a general question about unions. I know I'm a part of a musicians union. I've been a part of one. And I know they have painters. I know they have labor unions. I know they have all kinds of unions. And so with your personal work that you do when you're not offered an assignment or extended an assignment by a union, I know that there's certain guidelines and things that you have to follow in making money or income in that kind of feature. And so I wanted to know, have you worked with anyone in business entities that deal with unions and they have their own business?
So you're
Aside
saying,
from-
so your question is, have I, and maybe a general question of how does it work when someone individually is a member of a union, but does the business that authorizes them to be in that union as an entity?
Right.
Is that the
Have
question?
you had any kind of
I haven't. I haven't actually ever had anyone raise that issue with me. I believe it's very possible that I've created entities for folks that are members of a union, but no one has ever raised the question that it has created some sort of issue with them being a member of the union. I would opine that any membership in the union and the advantages or just restrictions or advantages thereon, I would think you could create your formation documents to flow those requirements and restrictions and advantages to the entity itself. But I would think that you would probably have to go to the union organization documents, the organizational documents of the union. And I would think at this point in time that that's probably addressed in most union documentation, that how that interplays. Because yes, you individually are a member, but if you're doing your business as an entity, how does that work? And that would be the first place I would look if somebody came to me to ask that. I would say, can you provide me with your union documents and your membership information as to the obligations of the union and your rights in the union? I would assume that there would be some sort of reference to that in those documents. And if there's not, then I think you would kind of be free to address that in your own formation documents, to pass on your rights in the union to the entity to the extent that was possible.
All right.
So unfortunately, I haven't had an opportunity to really look into that and to address that. But the first place I would look would be the actual union documentation, because I would hope and I would assume that that's addressed in their documents.
All right. Thank you.
So Erica would like to know, what are typical market rates for legal services for a small business?
Formation of an entity, be it a corporation, an LLC, we charge $1,000, and that's market rate. You could probably find some folks that do it for $500, and I'm sure LegalZoom would probably do it for $150. And I've seen a lot of people come in with LegalZoom documents. Not to say that they're not effective, but I don't think, last I checked, LegalZoom did not have a Texas attorney on staff. So you get what you pay for most of the time in legal services. But we charge a flat fee, $1,000, to create your certificate of formation, file it with the Secretary of State. If you're doing a corporation, we'll draft your bylaws. We'll submit over a draft of the bylaws. You look it over. If you have questions about anything, you want to change anything in it, you don't like the way that's phrased, you don't want this, you want that, we modify it, we make it your document, and then you've created it. And also that includes meeting minutes for your organizational meeting of the entity to basically create it. So then that coupled with the $300 filing fee, which I know it's for the corporation, and for a LLC, it's $300. I think if you're creating a limited liability partnership, I think it's significantly greater, like $750 per partner to file with the Secretary of State. Why it's that much more expensive, I don't know. That's just what their fee schedule is. But to create an LLC or a corporation in our office, it costs you with the filing fees, and we always suggest that that our clients get a corporate book, which is, it's more or less a fancy binder with properly labeled tabs to keep your corporate meeting minutes, your certificate of formation, your bylaws or your company agreement and everything in there. So all told, to get an entity put together properly and get it underway, it's just under $1,500 for our office. And what I tell all my clients is, hey, if you've got a question after you've created your entity, shoot me an email. I'll answer. I mean, I answer questions all day from my clients, and I don't charge them anything, because it would take me more time to create a matter, bill it, and send out an invoice than it is to just answer the question and shoot the email and move along. So I've got clients asking me questions all day long. Now, if there's a contract or something that they want me to look at, then, you know, I'll spend an hour or two looking at that. That's going to be charged extra. But to answer your question, a general idea in our area, maybe not in Dallas, but in Denton, about $1,500 will get you a full and complete attorney reviewed custom entity created for you.
Okay, great. So Jamila would like to know, she says, I think Google is still an LLC, but it is a public traded company. What allowed them to become publicly traded without being a C Corp like most?
That is beyond my, that's going to go into SEC and the SEC regulations and doing your IPO and things of that nature. That's probably going to be more of a CPA question than me. So I don't really know, but my guess is Google is not a Texas LLC. I would bet Google is most likely either a California, Nevada, or a Delaware LLC, and their state laws are significantly different on the LLCs. You'll see most large companies are either Delaware or Nevada corporations or LLCs because they are tax havens for entities. They give them significant tax breaks. But how Google took an LLC public, I guess if you just create the proper formation documents, because an LLC has ownership interests. So I guess you could, if you create the proper disclosures and the proper offering documents, I don't see why you would specifically be restricted from offering shares or membership units in an LLC on the open market. But as obviously your question points out, most all companies that go public, if not all companies that go public as a corporation, because it's easier to deal with shares of a corporation and everybody, it's a lot more easy to deal with. But Google's Google, and they can do a lot of things that most other companies can't. I'm sure they've got a reason why they did that, and I'm sure it has something to do with their taxes. But asking me why they can do that, I couldn't tell you specifically.
So Kim wants to know what would pose a problem with verification of business number extending from the IRS in that you have your business number, but want to see the listing of it when looking it up.
Can you read the question again?
Kim, can you pop on?
Yes. When I did get my business number for my taxes, I filed, and when I filed, I had gotten a business number.
Now,
And
when you say
so-
business number,
Well,
is
the
that
number, the filing number, when you file IRS taxes, they want you to be able to put in the codes.
your EIN?
Yes. So
Okay,
I
your
already
employer
have one
identification
for
number.
another nonprofit, but I needed additional one for my DBA.
Okay.
And so I went ahead and applied for that
Uh-huh.
to put it in for my taxes. And I did it online and I got it back immediately. If you mail
Yes.
it in, you don't get it as
Yes.
quickly.
Yes, that's the
But
way
I
I always
never-
apply
I
for an
waited.
EIN. That's the way I always apply for an EIN online.
I waited, I think they said 7 to 10 days. So I waited like 10 business days to make sure. And I checked periodically, and then I just really did not see the number come up in all of the very places that I tried. And about 2 months in, I had kept, calling them within 2-3 month period just to try and verify. I did finally get with them online and was able to speak with them around a tax time. And then I just wasn't sure if anything different was going on with my computer system versus something that was going on with theirs. And I just didn't know. I was told by them that it's a verified number, it's accurate, and it works. But I just wasn't really sure why I couldn't look it up online.
Now, if you're asking if you have an EIN number that you've got, can you go and do a search and figure out who that EIN number belongs to?
Yes.
I don't know of a way to do that.
Mm-hmm.
I don't think that's a thing that the IRS allows you to do because I don't think they want people randomly picking a number and then going and searching and being able to attach a business name to that EIN and then fraudulently using that EIN with the business name. That'd be like if you could search people by their social security number. Anybody could just make up a social security number, punch it into the search engine, come up with a name, and then start using the name and the social security number. Pretty much an EIN is the social security number for your business for tax purposes. That's really what it is. And so I don't think, I haven't been able to find a way to either search a business name and find their EIN, because a lot of my clients will come to me and say, I completely forgot what my EIN was. I don't have any of the documents and I need to file something. Can you, if I give you my business information, can you find my EIN? I said, no, you'll have to call the IRS. They'll have to verify who you are and that you are the entity, then they will give you the EIN.
Okay. Also, I know with nonprofits, sometimes you're giving that number in regards to tax-free
Yes, absolutely.
resources that you're trying to get access
absolutely.
to.
You have to give that. Yes.
All right. Thank you.
No problem.
So the next one is from Marquita, and she has a question about contract enforceability with 1099 workers outside of the US. What are some best practices, or if we have some IP concerns to just avoid non-US contractors?
What my suggestion would be is in your for best practices, in any contract that you have with anyone where you're concerned about what law is going to apply or with anything of that nature, in your contract itself, specifically spell out what law any disputes regarding this agreement or with regard to this agreement will be resolved by. So say in virtually every one of my contracts, no matter what it is, for any reason, I've got a choice of law provision in there. And it has two segments to it. One is the laws of the state of Texas shall apply to all disputes related to this document. And then the second paragraph that follows that immediately is all lawsuits related to enforcement of any provision of this contract shall be brought in the state courts of the state of Texas with venue lying in Denton County, or if it's a federal lawsuit, in the Eastern District of Texas. So specifically say, A, what law is going to apply, and then B, if a lawsuit is filed, even if it's Texas law, they could file it in California, and California can apply Texas law. But you say, hey, Texas law is going to apply. And if you want to file a lawsuit to enforce this agreement, it's going to be in Denton County or in the Eastern District of Texas if it's going to be the federal districts. That's going to be your best practices. Now, how enforceable that's going to be against somebody who is actually physically residing in another country, I don't know. I mean, I think that would be something you're going to have to consult with someone who specializes in international contracts. You may be able to find somebody that does that in Dallas, but most likely the folks that are going to be doing that on a regular basis are going to be in Houston, New York, LA, your larger markets that have folks who do a lot of international commerce and where that type of law is really, really needed. But, you know, I would say if you're concerned about enforcing that against somebody who absolutely will not ever touch foot here in the state of Texas or in the United States, I think your best practice is going to be assume that you're not going to be able to enforce it against them and act accordingly. Do what you can to protect yourself, but the enforceability of that may be very small. Doesn't mean you shouldn't put it in there and threaten them with it if they do decide to breach it. But if they talk to anybody or if they're intelligent enough, they're going to know, you can't enforce that against me, just as they probably wouldn't be able to enforce anything against you. So it goes both ways.
Great. So this one is from V. She's watching us on Facebook. If you have a DBA doing a service company, but begin a product company, should another entity be created since it's a different form of business?
If it is a totally different, I mean, is it required? No. Can you run two product lines out of the same? Can you run a service and a product company out of the same entity? Yes. Is it going to get messy and complicated? Yes. Is your accountant going to hate you? Yes. Is it best practices to create a separate entity? Yes, because then your accounting's going, because the way you account for a service business and all the ways you invoice and everything that goes on in a service related business is very different than a product related business. So my advice, if someone came to me with that and it was my client, I would say absolutely, no question about it, create a separate entity, you know, suck up the filing fees and just deal with the maintenance of a separate entity. But I think in the long run, everything will be much cleaner. Your accountant will like you much more, and your IRS filings, your tax filings for each entity will be a lot cleaner than smashing these two different lines of business on the same tax return and accounting spreadsheets.
Okay. So Jamila, she said she understands the difference between management and ownership, but what is the difference between membership interest versus ownership? Can one person have sole ownership, but there still be interest? And she said this question was specific to an LLC.
Yeah, an LLC, ownership interest, membership interest, those are all interchangeable. A member of an LLC is who owns the portions of an LLC. If you've got 5 members, they may each have 20% ownership, membership interest, or one of them may have 10, one may have 5, one may have 50. That's all going to be spelled out in your company agreement. And or some companies, some LLCs will have a company agreement, and then totally separate and apart from the company agreement, they'll have a membership agreement. That's some sort of ancillary agreement between the members as to how they're all going to act. So when I say ownership or membership interest, that's all the same when you're talking about an LLC. Then the only thing that's separate, as you've acknowledged, the only thing that would be separate is if you have a manager managed LLC, you would have a separate level of managers, and they could be the same as the members, but usually it's different. If you're going to create that separate level, you're going to have a different number of managers than you will members.
She said,
Hopefully.
thank you.
Okay, good.
Okay, so then we also have one from Kelly. We formed our LLC in New Mexico, but registered it as but she registered it as a foreign entity here in Texas, and about to get a resale license. Does her partner and her need 2 accountants, or can one in New Mexico handle all of our maintenance and filing and all of that stuff?
You're still going to need to file annually your public information report, and I believe you'll still be filing your franchise tax report here in Texas because you're doing business here in Texas. So Texas is going to want their pound of flesh. If you create enough, if you generate enough income to subject yourself to franchise tax filings, but you will have to file annually your public information report because that's where you let the Secretary of State know who is current management, has anything changed, so that their records are updated annually. And if you don't file those with the Texas Secretary of State, you'll lose your right to transact business in Texas. They'll revoke your charter if you don't file your housekeeping documents and your franchise tax return, franchise tax report. So do you need an accountant here and there? Probably not, because if your accountant's doing your real accounting work for both the Texas business and your out-of-state business where you're actually registered, as long as your accountant feels comfortable or you feel comfortable filing your annual documents here in the state of Texas, you probably won't need 2 accountants. You'll just need somebody, either yourself or your out-of-state accountant, to properly file. And most out-of-state accountants will be able to figure it out, how to file the annual reporting documents here in the state of Texas. So the short answer is no, you don't need to have 2 accountants, as long as your accountant or you feel comfortable filing the required documents here in Texas.
So Kendra wanted to know, she has a 2-page contract for every vacant staging service. How much would an attorney charge to review this document?
Our fees for a contract review begin at 1 hour. So it would just be an hour's worth of my time, because, would it take me an hour to look at your contract? No, it'd probably take me 5 minutes to read over your contract. But simply reading a contract without any other information, any background, what this contract is for, how often it's used, what type of people it's used for. I mean, I can read a contract and I'll go, okay, who's my client? Which side of this contract is my client? Because on a contract, I may really like it if I represent one side, and I may really hate it if I'm representing the other side. So depending on who my client is, I'll have different comments. And I'd also want to spend some time, if I'm reviewing a contract, talking to my client about, what is your business? Because I need to identify possible liabilities out there. What do we need to cover for? What possible contractual issues are we going to have out there? So I would tell anybody, if you came to my office, I would say, I'm going to charge you an hour of my time, at least, to have a conversation with you about this, figure out what your business is, what we need to protect you from. Then I would read your contract. Then I would give you comments and say, this looks great, or I'd add this here. You know, I would obviously add a choice of law and a venue provision in there if it's not already in there. There's a number of boilerplate things that need to be in every contract. And, you know, some that you pulled offline or that you've created yourself may or may not have those, at least those boilerplate provisions in there that I suggest be in every contract, at least here in the state of Texas, where I'm licensed in practice. So, you know, my hourly rate's $3.50 an hour. So that's what I would charge you. Obviously, every attorney is different, and whatever they would charge you would be different. But I think you'd be hard pressed to find somebody that would just charge you the 5 or 10 minutes it would take them to read the contract, because it would be difficult for them to create any context as to what they would be advising you with regard to the contract.
Okay. So Jamila had another question. She said, how does the state of Texas view ownership in marriage? Does a spouse's name need to be added in the LLC documents if the company was created before marriage, or are the married couple already considered as one entity? And she said she's asking for a friend.
Gotcha. So now you're getting into marital property, and generally, any asset owned prior to the date of the marriage is separate property of the spouse who owned the property prior to marriage. So if you own the entity and it was created prior to your marriage, that entity and all of your interest in it is your separate property, not subject to being divided upon divorce. Now, if you create an entity and use money that was generated during the marriage for its formation and its funding, even though you are the sole person listed as the shareholder, those shares that you hold are community property. Even though your spouse's name is not on there, upon a divorce, those shares would be subject to being divided by the divorce court. That's why in all of the company agreements and bylaws and all shareholder agreements and everything that I draft, there's a provision in there that says, if you get divorced, here's what happens to your stuff. And we do our best to fight against the Texas Family Code, which says, hey, the spouse of the person you're in business with, whom you may or may not care for, or may not even know very well, may get a 1/2 interest in whatever your partner had in your company. So congratulations, now you're in business with the both of them after they've been divorced. So you need to get on that. And the same thing happens with death. Somebody dies and their kids, their spouse, or God forbid, their ex-spouse ends up with their shares in your entity. And now you're in business with somebody you don't even know. So that needs to be addressed in all of your corporate documents. But to answer your question quickly, it's if you owned it before marriage, it's yours, period, the end. Spouse is not on it. If you bought it, if you created the entity or acquired the ownership interest in the entity during the marriage, even though you're the only one that shows on the records of the company as the ownership, it's going to be community property and your spouse is going to have a 1/2 interest in it.
So Laura wanted to know, she says, I know you don't want to get too much into accounting, but again, with a single member LLC, you file those taxes on a Schedule C, like when you are a sole proprietor?
Mm-hmm.
Okay.
You can do that. I would again talk to a CPA, but I believe if you're a sole member LLC, I believe you can file those on a Schedule C on your personal 1040s and not issue K1s.
Okay. Patty asked, why file in Texas if other states are tax havens?
Because then you'd have to hire counsel and CPAs and folks in those different jurisdictions. And so unless you're going to be generating sufficient income to justify those additional expenses and hassle, most of the time it's just not necessary, because then also your entity now has to file in that other state. Then it has to be registered as a foreign entity here in Texas if you're going to be doing business here in Texas. So now you've doubled your filing requirements on an annual basis. So again, advantages versus the cost and hassle of maintenance. You know, if you're generating millions of dollars a year, maybe it pays to have a Delaware LLC and take advantage of their tax ramifications. It would be justified in having a Delaware entity attorney and CPA, and also somebody down here to manage your filings and all of your business here in Texas. Thankfully, we don't have a state income tax, so we don't have to deal with that. But other states may, so you'll have to have, if you've got an entity there, you've got to report, you know, stuff done there. Again, I don't know much about other states because I only work here in Texas, but that would be why, you know, most of my clients just create a Texas LLC, because the tax advantages that everybody jumps up and down about don't really come to fruition until you start making really significant amounts of money.
So last question from Sarah. You mentioned more cost to convert from a sole proprietorship to an entity at a later time in the future. What does the cost look like to convert at a later date?
If you're a sole proprietorship and then you want to convert to an entity, it's going to be the same price as creating a brand new entity right now. I think where you're going to run into a little bit of difficulty is with your contracts and everything. If you entered into a bunch of contracts and maybe they're still ongoing, or maybe you're in transactions with vendors in your individual name as a sole proprietor, or a DBA as a sole proprietor, then moving into the entity, then you have to make sure that you've taken care of all of those contracts and all of those engagements that you have with everybody, so that they now acknowledge you're now an entity. Because if you don't tell them and something comes up down the road and you're like, no, I've got this great entity protection, I'm not liable for that, it's just the business. They're like, we had no idea. You started doing business with us as a sole proprietor individually, and we never knew you incorporated or you filed an LLC. You know, there's going to be some issues there, and possibly with your tax filings, carrying over bases of assets for depreciation purposes and all that. Again, I'm not an accountant, but to me that stands out as something that you would have to address, or maybe not be able to take advantage of, or you might be able to take supreme advantage over something if you create new bases, because you're transferring it from your individual self and selling these assets to the entity. Because that's probably what would happen, is you would show it as a sale from your individual self to the entity, because the entity would now have to own all of those assets that you would be doing the business with. So there's just, I'm not necessarily saying it would be significantly more expensive to do it afterwards than on the front end, but there's a lot more that you'd have to think about and deal with if you were running a business and it's up and running and you're rolling, and then you decided to convert over.
Awesome. That's all the time we have for questions. Tracy?
Well, thank you, Chris. That was great information, and I'm sure there will probably be more questions as well. But again, thank you so much. This is always such a great topic, and we really want to make sure everybody starts off on the right foot when they start their business. So we sure appreciate you being here tonight. Everyone, thank you so much. Next week, we are having our class. Again, if for some reason you can't attend, we will send out the video and the information on it. It is going to be insurance for small business. How daring are you? This is really a great class because so many don't realize all the different types of insurance and what it covers for your business and what things aren't covered. So it's a great class. Then we'll have one more after that on Tuesday, December 1st. And that is Drastic Steps Marketing, Get Known, Get Connected, Get Paid. And so that will be the last in our small business training course. So all of you then will need to finish though a business plan and send receipts for your first 2,500, and then you'll get the second half. We are in process of getting those paid. It always takes a little longer in the beginning when we have to set up all your paperwork, but everything has been set up. So if you have any questions, always reach out and we'll be glad to help you with that. We also on December, Donna Lisa, is it the 8th? The 6th?
For the 8th is Women Rise, and that's with Shirley Staton, right? And it's about planning for your business for the next year. And then December 10th, we're doing a fireside chat with Amber Fletcher from Fletcher's Original Corny Dogs. She's gonna share how they did a huge pivot this year with COVID. So a great time, and our last event for 2020.
So thank you, everyone. Hope everyone has a great evening.
Good night.
Thank you.